First of all, thank you so much for joining. And the panel is an important panel. Dr. Ayesha, thank you for your support. And thanks to everybody that the last 2 days actually was extremely happy moments for us after opening the doors. And we had great attendance. Yesterday we reached around 640 visitors, and today we're around 400 plus. And it's extremely a happy moment for the block. And yeah, to start the big picture of the market, we have a lot of questions. Of course, it wouldn't suit in such a short panel, but just to start with it, the main thing that I wanted to start with is the role of tokenization and the evolution of the financial markets. That how we see this would be a direct question first to you, Dr. Ayesha, and then we're going to follow and see a little bit more experience of the other colleagues.
Thank you very much for having me in this significant event. It's good to be out and to see all this activation and happening actually around our offices, which are 2 blocks away from the block. And happy to be here and seeing all these excited souls to be part of the ecosystem. From a big picture perspective, I would actually say it's really important to first highlight that tokenization by itself in nature is like, as an initiative as well, is fully aligned with the Dubai D33 strategy. And it's important to highlight that the Dubai D33 strategy basically aims to double the GDP impact from a digital perspective. And we as VARA play a very significant role in basically regulating, supervising, and enabling the ecosystem, specifically, not only from a tokenization perspective, but from an overall perspective. When it comes to the big picture, I can see that not only locally but globally there is a structural shift, and this shift is basically going towards a hybrid system, a hybrid investment model. People used to basically invest physically in tangible assets, right? Whether you want to buy real estate, you want to buy gold, a commodity, but it was also very limited because not everyone had accessibility from different jurisdictions. Not everyone had accessibility to access the market itself. But putting it on the blockchain actually made it so beautiful, made it so accessible and transferable and operatable at the same time. So I think, having said that, it's really important aspect that the operability of the ecosystem became so unique that the transferability can happen in seconds. And this is what makes it really, I would say, critical to the ecosystem.
Thank you so much, Doctor. Yeah, as all of us know, that Dubai was the first in the world to do the tokenization of the real estate with the Prypco guys we have here with Jad and team. And we are very lucky to be in a space that the regulator is listening, is talking to us and understanding what are the needs of the market. And that has been something that I didn't have back in Austria. We got regulated there, but it was a different way of doing it. And now we are very happy that we have the support. Jumping to the one question would be, which problem are we solving? And that is for all. I start with Dr. Ayesha first, and then the idea is, what are we solving? Is it liquidity? Is it access? Is it transparency? What would be the advantage that you see of the tokenizing assets? Whether it's real world, is it company shares, equity, whatever it is, what would be the solving that you think that tokenization will change the environment and industry?
I think most importantly what we are solving is financial inclusion and financial freedom, where everyone has access to market. Everyone, regardless of their race, nationality, class, can invest today. And that's what makes it really important, because previously, if you want to invest in a property, you need to have at least a 4 million dirham to invest in a townhouse. But today, with the blockchain, with this partnership that we have today with the ecosystem, you can invest with what, 1,000 dirham, 2,000 dirham, and even with 500 dirhams. And imagine the investment size, the ticket is so low that everyone has access to market. And I think that's the most importantly how we look at it as a regulator, but I'm sure my colleagues from the industry look at it from a transferability and technology perspective, and I leave the floor to you guys to add.
Yeah, for sure. First of all, Farbod, thank you so much for having us. Thank you to the blog team for hosting us at this beautiful venue. Congratulations on the launch. It's great to see everyone from friends to colleagues to partners to competitors to the ecosystem to regulators in one space in real life once again. So super excited. Congratulations again to Farbod, to Nikki, to Roy, to everyone, and to Ocean. My name is Jad. For everyone who doesn't know me, I'm the head of operations for Prypco blog. For Prypco, Prypco is actually on a mission to unlock real estate freedom for everyone. And we've been fortunate to be leading the space in terms of fractionalization, in terms of tokenization. And yeah, to your question, unlocking freedom in real estate for everyone is lowering the barrier of entry to people who are not able usually to buy a whole property. They're able to do so today with tokenization for as little as 2,000 dirhams or even less, 500 dirhams these days, which is something incredible. We've seen it in real life with our customers. They come to us and they thank us for the opportunity to own a fraction of the real estate in Dubai for the first time. They've never owned a home before. Some of them early on never owned a home. So for them, owning a piece of real estate, even if it's 10% of the whole property, is super sentimental for them, and it's like an achievement for them in their lifetime. So there's a purpose behind all of this, right? And tokenization is able to bring that to the table. Of course, from an operational perspective, from an efficiency perspective, there's also benefits there. When we look at real estate, it's traditionally a very semi-liquid, very slow, very multi-party market, right? And use cases like these where there's a lot of manual transaction, there's a lot of human error, there's a lot of ambiguity. This is exactly the checklist you need for blockchain and for tokenization. That's exactly where the use case fits. So real estate is a very good example for tokenization, and it's really increasing efficiency. It's eliminating some costs that usually are there in the past in the TradFi world, such as establishing an SPV or maintaining the SPV over years, or even incurring the costs of trustee fees when you come to the trustee office to exchange ownership versus value. Tokenization eliminates all of that. So there's a lot of value that tokenization is bringing, and we're super excited to be at the front of it.
Thank you, Jad. Sebastian?
Thanks, sir. Appreciate it. Thanks for having us, and congrats too. I must say I'm a little bit jealous of the space, in all honesty. It's fantastic. So given that our office is right up here, I shall make proper use of it. I'm not going to build too much on what's already been said. I think these are all very valid points. I think when you think about how do we think about these problem statements, because there's not one, right? And I think my shortest answer is all of the above, but in a sequential manner, right? It's going to be a period of time where we need to lay the foundations for what comes next, right? Today we're solving clearly for distribution and I guess what I would call optionality, right? We're not, I know there's some conversation later I'm sure it's going to come up about liquidity and so on and so forth, because it always comes up in these conversations. But making the investment journey digitally native unlocks distribution and optionality, but it also lays the foundation for new products in the future and so on and so forth that previous stacks and regulatory frameworks simply couldn't build upon. So I think it's quite important to think about it from the lens of we're in the very, very early days of a most likely a plus decade long kind of journey, and we're in a jurisdiction where we're ahead. So yeah, foundations is kind of, it's not a defined problem statement, but it is something we're solving to be able to solve the future problems.
Lovely, thank you so much. We have seen that, it's just a random question that I wanted to know, because everybody are talking about real estate tokenization. Is it that it's a common investment that everybody knows? That's why all the tokenization globally is more going towards that, because we have a lot of other use cases for tokenization. I mean, I'm one of the biggest fans of farming And in Europe, I started doing tokenization of farms. And instead of getting your products from somewhere, you're supporting your farmer with an investment, and you get in return the goods that they produce. My question is, why real estate? Is it because we know it, doesn't need advertisement, or is it the asset class that was first approached? Because most of colleagues, most of the companies we meet, they are first starting with real estate. Just Sebastian, if you let us know, why is that one, or is it going to be more other challenges?
Yeah, it's a great question. So I would say here in the GCC generally, obviously us being the UAE, real estate tokenization leads the dialogue, right? But if you look at numbers, it doesn't lead, right? Money market funds, treasuries, etc., it actually leads tokenization by quite a factor. But forecasts certainly expect, and it will happen, that ratio is going to flip in the opposite favor, right? You can just look at the asset class overall. We're very, very small today, but playing in a sandbox that is absolutely enormous. I'm not saying treasuries and money market funds aren't big, but relative to real estate, they're not. Why real estate? You know, a tokenized T-bill is not a particularly exciting topic at the dinner table, but a tokenized apartment in Dubai is a pretty damn exciting product to talk about, right? So it's in a sense like the cultural gateway to what tokenization as a concept is. And for regulators and operators and so on and so forth, it's exciting to have technical conversations, but that's not the conversations we should be having in the public domain, right? And real estate lends itself very well, especially in a region that loves real estate as an asset class extremely to a high degree. And I also think that the lack of access to that real estate, to that asset class in the past plays a role, right? There's an exciting thing that I can now come in with 2,000 dirhams or 4,000 dirhams, which previously was quite difficult. So yeah, that's what I mean.
Lovely. What you guys are up to?
All right.
Because I think you're expanding your investment funnels, but still Prypco started as a real estate.
Right. Prypco started as real estate for 3 different reasons. One, real estate is the biggest asset class in the world. $300 trillion in real estate that is accessible to the world today. 1 trillion almost in the UAE. We got 400 billion of them in residential real estate. So there's a lot that we still left to tokenize. That's one. And like we said before, right, it's a perfect use case where tokenization can come in and help. So there's a lot of value there. Number 2 is, and we have to give a shout out to the UAE, the government, the leadership for pushing the agenda forward for innovation with tokenization. Dubai's strategy for 2033, like the doctor mentioned, to bring in foreign investment to the country, to increase the real estate sector share of the market, to increase the GDP through innovations like these. You gotta hop on board, right? And the ecosystem is there, the regulator is there to embrace that. There's a lot of players that are wanting to enter the market and compete and grab a share of that market. So there's a lot of incentives for, in the UAE in particular, for real estate to be that use case, and we want to be all over it. So there's that, and of course, like I mentioned, the third use case. There's many stakeholders involved. There's a lot of inefficiencies that can be solved, and there's a lot of work to be done, and there's a lot of use cases beyond just residential to be tokenized. Talk about that a little bit.
Okay, lovely. Dr. Ayesha, what is actually when you own a tokenized asset, whether it's a real estate or whether it's any other asset that you guys are licensing it, what do people really own, and how is the process that they should feel secure that they really own it? How is the ownership structure from the regulator side?
What people actually think most of the time is actually they believe that they own a fractional ownership of that asset. And most of the time it does. But sometimes actually not every economic exposure is a fractional ownership. It can be an economic right exposure. What I mean by that is that you may have economic rights for the rental income of that property. You may have economic right for the basically revenue generated by that factory. It doesn't mean necessarily that you may own the factory itself. Yeah. So it's very important for us as regulator when we license the VASPs and we look at those use cases for tokenization. The white papers have to be very prescriptive, ensuring there are clear disclosures, full transparency on what actually is the underlying asset, what type of ownership is there, what is the beneficial prospect of that token itself, how is the token actually anchored from a perspective, as I was mentioning, is it a rental income, is it an economic right, do you have voting rights or not, can I vote to basically sell the property or not, the transferability, all of it. And it has to be inclusive of everything. It has to be really very clear, and that's what we really focus on specifically, and that's why we are one of those regulators that all white paper have to be published. Public disclosures, risk disclosures have to be there, and I think that's what really creates market transparency. And when it comes to building trust, we've seen that in the market, and retail trust actually is momentum. And what I mean by that is like the hype is there, everyone in retail is so excited, I can buy a property in 500 dirham or 1,000 dirham, but institutional trust only comes when you have legal certainty. And what I mean by that, legal certainty doesn't come only from the fact that, oh, it's on a nice blockchain, it is secure. No, it comes from, is that legal contract enforceable? Can we actually enforce cross-jurisdiction? For example, is that basically, do I have redemption rights? Can I actually redeem my token or not? Maybe it's on a very fancy, fully robust blockchain that is unregulated, and then when something goes wrong, basically the institutional client will not be able to liquidate or redeem, right? So institutional clients will only trust, and the trust will only come when there is legal enforceability and redemption rights. The trust will come by that.
Great, thank you so much. Actually, very happy to have VARA with us, and then internationally, thanks to the VARA team in Dubai, VARA is recognized everywhere, and this is like the future, what we see, that out of Dubai we can do global projects. What the block actually does also, we are getting international projects to move here because of exactly the branding, the positioning, the great companies as you guys that you are in the market. Just jumping a little bit on the tough side of the market, and I would say the secondary market trade liquidity, as we discussed, that one is always a question everybody comes up with, and I would love to hear from you guys that you are in the market. What would be the optimum secondary market and liquidity way that you guys want to see? Because the crypto world, liquidity is totally different. Unfortunately, everybody compares real world asset to crypto assets, and they say it's not liquid. Not true. I know that. I don't want to get that deep in it, but how would be a secondary market success for you guys, and how the liquidity would be? Chad, you start.
Very good question. In terms of history, what we've done so far as Prypco, if you guys are not aware, we launched the primary market last year, May 2025, with the support of VARA, with the support of the Dubai Land Department. Shout out to the Dubai Land Department as well as VARA for embracing this and kickstarting this journey for all of us in the ecosystem. We also launched the secondary market actually in February 2026, in the 20th February, right before the regional conflicts, and we were fortunate to reap the rewards of a short period of time in the beginning before things went on halt, and hopefully we can resume operations very soon. The secondary market launch has taught us a bunch of things. First of all, tokenization is not going to solve liquidity. Just because you're tokenizing an asset doesn't mean you have demand for it. It's all of a sudden you have wallets that are populated with investors' money that are ready to be deployed. Liquidity comes from many different forms. Like we've seen in the crypto world, when stable coins are issued by stablecoin issuers in the UAE or other parts of the world, the play is around adoption. The play is around reach, it's around utility, not just about tokenization and issuance, right? Which is really important to distinguish here. So when we think about liquidity in an exchange, we're thinking about the ultimate North Star, Farbod, is the matching every buyer to the seller. So if you're a seller, you need to be instantaneously able to find the buyer to your token and cash out and do something else with your money. And same thing for the buyers. So you need to enable that. How do you enable that? You need as much reach as possible. Today, our Prypco Mint is available to Emirates ID holders. In the future, it's going to be available to foreign investors. That's increasing reach. That's your customer base that becomes international. Reach is really important. Utility is very important as well. What can you do with that token? If I'm not able to trade this token today, what can I do with it? Can I use it as collateral to get a loan, for example, for a short term? Can I exchange it for another digital asset? Can I exchange it for a tokenized commodity, for example? What can I do with the token is really important, and that helps with liquidity as well. And like I said, the UAE is a great ecosystem to help increase that utility. You have a lot of different players playing on all sorts of fronts. You have stablecoin issuers. You have the digital dirham with the Central Bank of UAE. You have many different tokenization players, not just in real estate, but beyond. How much utility can you achieve? How much integration with the ecosystem you can create is the key to success in a secondary market. So giving options to those investors is really key to that scale.
Thank you, Dad.
I mean, it pains me to admit that you nailed that one. Well done. Good. Yeah, I'm not going to repeat that, obviously. I agree. I think the piping is what unlocks liquidity, right? And building out that piping. The element that's quite unique to tokenized RWAs compared to other structures that you buy and selling is that a lot of those, or most of those assets still today, and certainly historically, they sit in an ecosystem that is not compatible with the on-chain ecosystem, right? And the flip side is that there's a lot of money, quite frankly, sitting on-chain today that doesn't have a path to accessing the real estate itself. So when we think about sort of mid to long-term liquidity, unlocking access to DeFi native type capital, on-chain capital, is a big play, right? And from that perspective, it's not only technical piping. Now we're talking about regulatory frameworks and piping to support those product structures. One thing is fiat in, fiat out. One thing is when you can go fiat in, stable out, RWA in the middle, and all computations of that. Now it's starting to get pretty sophisticated and complicated, but that's where I think the most exciting future lies.
Lovely, thank you. I was actually very happy last week. I got a call from a financial company back in London that they were telling us, do you guys want to offer loan to values on the real world assets in UAE? And we would be keen to go and take a look into. And we see that the market is moving, but still we have some hiccups here and there that are going to be solved. I think we have another few minutes. I would love to use the next few minutes that if I want to see a perfect market for what we are doing for the RWA secondary market in the next 12 months, what do we think need to be done? Whether from the regulator side, from the operation, infrastructure, payment rails most probably. There's a lot of aspects, but I wanted to see what you feel, what you think about that market, and what shall we do in the next 12 months, that hopefully next year, same time here, we have a bunch of those assets that you named already tokenized. And I would pass to you, Dr. Ayesha, what would be our tasks for the next 12 months?
I think before I jump into the final thing here, I want to highlight, maybe a lot of you don't know, that VARA is the only regulator today that has an independent issuer license. And what I mean by that, as an independent issuer license, is that it can allow you to issue as many assets that you will issue based on your master white paper and your basically other technical white papers. So it's very important. And our rule book, when we launched it and updated it, we distinguished in the Cat 1 category license the asset referenced virtual assets from the fiat referenced virtual assets. And that what gives not only regulatory clarity, but it gives legal certainty on how you can enforce those regulations. And I think this is where this is very important for the ecosystem, and we'll continue to tap into that area to ensure that there is legal, basically, enforceability, there is regulatory clarity, and to make sure that the ecosystem is basically enabled, not only from an infrastructure technology perspective, but actually, most importantly, is to gain customer confidence is the custody of the assets. And that's not only related to real estate, right? Because you still have the SPV or you have the title deed, but people are more concerned when they invest in a commodity, for example. I invest in gold, but I don't know, is that gold really exist? Who's actually auditing it? Where's the custody of that gold? Can I actually get an audited report? So this is all part of our requirements, and basically make sure that the investor is actually protected and ensures that the customers are really aware and safeguarded to build that economic trust. And this is where we're heading towards, and I think that what gives a lot of, energy to the ecosystem itself.
Thank you so much, Dr. Sebastian?
12 months is optimistic, but I like your bullishness. I would say two things would move the needle significantly for the ecosystem as a whole. The first one is multiple operators, not necessarily only in the UAE or under VARA, but generally operators within our ecosystem, to run the full cycle from tokenization to primary, secondary market exits, right? At scale, as much scale they can possibly manage. We're given a 12-month window, so we'll live with that. And secondly, we need large-scale institutional capital and players to get involved in the game, and they are. They're just at the periphery, temperature checking basically, and looking for that legal safeguard and protection that they need, right? Institutional capital and is equally on the asset side. It doesn't move in uncertain terms, right? It just won't. So now when we have that, they need to come to the table and start writing institutional grade checks into the underlying asset as sort of an underwriting party. Because numbers makes great headlines, whether we like it or not. We're here to save the world and do all these amazing things, but we have to bring the numbers to the table. That's why, JP Morgan and BlackRock are all over the news, because they're bringing insane amounts of treasuries and so on chain, and they're all over the place. So I think those two will move the needle in such a way that, because the narrative precedes the growth of the ecosystem. When the narrative is, this is going really well, it's really big, it's delivering X, Y, Z, the ecosystem itself grows. And when the ecosystem grows, we're all going to be better off, basically. We're collectively winning at that point. So yeah, that would be my take.
Lovely, thank you so much.
The next 12 months is continuing what we have been doing with VARA in the UAE in terms of embracing the technology, giving space for players to experiment, to fail and fail fast if they need to learn as quickly as possible, and for the regulation as well to keep on updating, right? We've seen rule books getting more updated frequently, which shows further maturity in the market. It's really important as we learn more about real-world assets and tokenization and so on. So I see that continuing. There's a lot of other use cases, like the doctor mentioned, other than just ownership. Economic rights, tokenization is a very big world that is still untapped, that brings cash flow efficiencies, that brings upfront capital to players that have been accessing traditional forms of upfront capital in the past. They're seeing tokenization as a way to access that faster at cheaper costs, right? When we have developers coming to us that are asking us to use tokenization to bring on a new revenue model for them that is usually very physical, very in-person, very at showrooms, etc. We've seen governments like the government of Georgia come to us and asking us to replicate the same model in other countries and other jurisdictions to bring foreign direct investment into the country. We've seen other players that want to integrate with the ecosystem to experiment. So under the supervision of VARA, under the care of the government, we're able to push those use cases forward. And as Seb mentioned, institutional, just like institutional came into play with crypto, with ETFs in the beginning, very careful, very risk averse. We want to see that happening on the real world asset side as well. And we want to see institutional capital flow, and that's where real estate use cases, further real estate use cases will come in, not just at direct ownership of one property, but maybe at a fund level, maybe at an index level, maybe at a REIT level. We want to see those use cases continue to come to life with the help of institutional capital as well. So super exciting times for the next year, and we're really proud to be in the UAE.
Lovely, thank you so much, Ed. Yes, we come to the end of time. I wanted really to thank you, Dr. Ayesha, to join us here, because where we are at home in Dubai, VARA plays the main rule book for us for growth and to be positioned globally as the only place. I call TheBlock the capital of virtual asset. Actually, Dubai is the capital of virtual assets also. And thanks to VARA, the only thing, last point, is that I think because of the ecosystem, because of what we have built here, also I would love all the startups, don't see anyone as competitors. We should work together hand in hand, because it's a huge market. I hear a lot, everybody talk about competition, this and that. Yes, it is a healthy competition, but working together, and all companies that we are at home in Dubai would support us globally to grow better, because that's something that I hear a lot, because I'm sitting in the middle here normally as the ecosystem, the block. I hear a lot, these guys did this, the other ones copied me, the other one did that. There is no copy. We heard the numbers, few hundred billions and trillions are there to be tokenized, and that's nearly us doing it. I mean, the community of issuing tokens, and then the only regulator in the world is proceeding so fast is VARA. It means we are sitting in the right place, right moment, huge market. Let's support each other. I thank you very much for coming tonight, and thank you, Doctor. Thank you, Jad. Thank you, Sebastian. And hope to see you guys soon back again, because definitely we need to follow on this. Lovely. Thank you so much.